Welcome to the Mentor Podcast, where the most highly motivated entrepreneurs come to get their weekly dose of financial stability with host Ron LeGrand, as well as other nationally recognized thought leaders who will teach you how to get, grow, and protect your wealth.
Well, hello there, my friends. Good to be back on the mentorpodcast.com. Now, you might not recognize my voice today and think that I'm some kind of a bot. No, I'm not a bot. I just can't talk clearly today. I think I can get through it, though. So I have a very special guest today that I've been looking for a long time. His name is Danny Phee, and he's all about stocks. Our business here at Global is to help you make more money any way we can. And, of course, we teach real estate. But the guy you're looking at over here is also a real estate investor. So he's kind of a weird dude, kind of like me, okay? Because I do stocks and real estate, both. How you doing, Danny?
I'm doing great. Appreciate you having me on here today. I couldn't be more thrilled to be here, especially in front of your audience, because they're just like me. Started off in real estate and, naturally it made me curious about the market. So I'm glad to be here to talk about it.
I wish I hadn't waited so long to get into stocks, because I've been avoiding them all my life, and I don't know why. I really don't. I know, I do. I didn't understand them. That's why. Okay. And that's kind of like we're here today. Plus, Danny's going to be doing an online training on July 2nd. So we'll give you a chance free. We'll give you a chance to register for that here when we're done. Well, I don't know anybody that knows more about you, Danny, than you. So tell them how important you are before we get going here.
Well, I appreciate that. I mean, I've been involved in real estate for years. I got my license back in 2014 as an agent, real estate agent, realtor. I hold my real estate license. I own rental properties. I believe in buying good deals and creating passive income. I still look for fix and flip opportunities when they make sense, of course. But real estate taught me how to evaluate risk and opportunity. So real estate is a part of my foundation. It taught me to think like a deal maker, and trading, though, gave me another place to apply that mindset. So, it really happened for me when interest rates started to go up in 2022. And I realized the real estate market has a bit of control outside of my control. And that was when interest rates went up, deals and the opportunity and structure started to change. So I started to dive deep into the markets and the bond market and what's causing these interest rates to go up. And then I started seeing that there's ways to make money in the stock market. And as you know, a regular real estate deal might take a few months, 6 months, sometimes 18 months to actually get a paycheck. And you got to line deals up one after another, which is great opportunity. But I love the prospect of the stock market and how liquid it is, and you can get in and out of opportunities. In the same way, like real estate, you're looking to buy low and sell high. Same concept in the stock market, just very, very liquid, and allowing you to earn daily cash flow with this setup and process that really enamored me. So, I mean, that's a little bit about me. Love real estate, huge background in it. Just, we're looking for...
You got two choices: buy it now and sell it shortly, or buy it now and hold on to it for long term, just like real estate. In fact, it brings me up to SpaceX, which some people watching know just happened. Biggest IPO in the world just happened this last Friday, and I bought some stock right then. And you just told me that stock is up $70 a share, more than I paid for it. So I get off here, I'm going to look and find out. God bless it. I didn't even start buying stocks till late last year. I don't know why. I've been avoiding them. I think because I didn't understand them. And I learned that they take education just like real estate does. You just don't go buy wildly and hope everything works out okay. You better have somebody that is capable of analyzing stocks. And that's your company, Stocks to Trade. I'm on your newsletter. I didn't even know it till you mentioned the name. But in real estate, buy and hold is great. Buy and flip is great. I do both, still do both, and I'm doing exactly the same thing in stocks. So I got to tell you, maybe I shouldn't be telling you, But I just started buying last November, and right now I'm up about $70,000 more than I was last. I don't even know what the hell I'm doing, to tell you the truth. I'm learning fast, and I have not bet big on anything. I bet small meaning I think probably the most I put in on one trade's a couple $1,000. Most of them are a whole lot less. So I'm still learning the ropes, just like a lot of people are trying to learn them in real estate from me. But it's good to be up when you're learning, okay? Better than being down. Well, look, we got way more to discuss today than we're going to get in half an hour. So I'm going to let you take the reins and tell everybody, why on earth should we be looking at stocks?
Well, I think the thing that, and I'll tell you my story. Everybody has their own story, but for me, I looked at it two ways. Just like you're kind of approaching it with real estate, you've got the opportunities you want to buy and hold for years and just collect maybe passive income off of a tenant. But then you also have properties that are a good investment to buy and flip. And there's even probably moments where you've just flipped a contract, and those are probably your quickest deals, right?
Yep.
And that's the same way to look at the stock market. I imagine when you mentioned you bought SpaceX, and I imagine from what you just told me, the 70,000 you're up is probably from a buy and hold strategy. Like that's the longer term investment similarity to real estate. At Stocks to Trade, we like the more of a paper flip. Maybe you're flipping a sub 2 contract or a contract for deed, and that can be quick money, right?
Yeah.
With Stocks to Trade, we like to teach trading. And there's a difference between long-term investing and trading in the stock market. You have your buy and hold blue chip companies like the SpaceX one you just referred to, or the Google stocks or the Mag 7 stocks that we know are likely going to continue to do well for decades to come.
Yeah.
But then there's those opportunities that show up in the market every single day that can go up double-digit percentage or even triple-digit percentage gains every single day. And what we like to do is we like to find those opportunities when the momentum is setting in, and we like to capture a piece of those moves and get in and get out the same day to get paid. And that doesn't mean that we win every single day on every single trade. Nobody wins 100% of the time, right?
I found that out.
But, when you can have the odds and probabilities in your favor, and you have an edge because of certain tools that we've been able to use and data we're able to see that most retail traders can't see, you can position yourself to win a lot more often than you lose. And when you lose small, because we have ways to protect our trades with stop losses, risk management. But the goal here is to take a tiny account and grow it massively in the course of a year or 2 years. And to give you a frame of reference, the average retirement advisor might tell you 10% a year buying and holding in the stock market is a great return. And I don't argue with that for a long-term hold strategy, because that 10% can compound year after year and really grow maybe a retirement size account in 20 or 30 years. But with the strategy that we teach at Stocks to Trade, we've had traders that are buying and selling the same day and repeating that process. We have one trader that took $5,000 and turned it into $500,000 in 2 months through trading. Yeah.
No kidding.
Yeah. We have another trader who took a $10,000 account and he put it in an IRA self-directed account too, because he's a little bit younger.
So am I.
Yeah. And there's ways to position yourself with different types of accounts, but he took a $10,000 account in January of 2024, and he turned it into over $4 million in a year and a half.
Get out of here. When's his course coming out? I want to buy it.
Well, the foundations of what he learned, and he was a valet driver when he started with us. His name is Jack. The foundations of what he learned started with, what we're going to be talking about early next month when I come back, for those that might be interested in learning that process. But it didn't happen overnight. He learned this skill, and at the time that he started this challenge with himself, he was up about 13 million from a tiny account 4 or 5 years earlier. But because he now learned this skill, he told everybody, all right, I'm going to take a $10,000 account. I'm going to show you now that I have this skill of trading versus long-term investing with the opportunity of buying and selling, really momentous stocks on a daily basis, because they happen every day. and we can get into the specifics of why they move, or maybe we'll just save that for when we do the training with more time involved. But he was able to, once he had this skill, take that 10,000 and just repeat the process he'd already learned to help him build a $13 million account, and just prove to everyone, if you have this skill, you can start with a smaller amount. And within a year and a half, he had it to over $4 million. And he's just going to continue to grow that account until he's above, 6, 9 and a half or whatever.
If it was in his Roth IRA, there's no income tax.
Well, for him, he's in his late 20s now. So he's got about, 30, 40 years before it might become tax-free. And by the way, I'm not a CPA, but I understand in an IRA, as long as you don't pull out of it after a certain age, all of the money in there is tax-free. And so you can trade within the IRA accounts, and we can talk a little bit more about that on the further training too. But the real point here is that there's an actual skill and ability to spot these opportunities, get in, get out, and see yourself up more than where you bought. And it doesn't take a long time. Often, like, there's 2 stocks I'm looking at right now that we've already traded today that have got in, that we got alerted to get into earlier this morning around the time the market opened, that have already gone up. One of them went up 122% from our entry price. One of them already went up 121% from our entry
this morning?
price. Just this morning. And
so you got to tell us which ones they are, man. You ain't going to leave us on the hook like that.
Well, the thing is, those trades have already happened. So I don't want to put out a ticker symbol now when the move's already been made. And the goal is to get in. And the moves happened within about an hour and a half. And they could come back, but the signal was already hit, the move already made. And that's another key thing to help you learn how to stay protected is these aren't stocks we want to hold overnight. These aren't stocks. This isn't the long-term SpaceX or Google play. This is, we're trading the momentum. We're flipping like the property, so to speak, but on the stock, and we're in and we're out, and we can move on to the next trade. We come back.
I got a question for me. Okay, this is for me. All right. When I buy a stock and it goes up, should I take back my profit right then, or just let it go up and keep compounding?
Yeah, that's a great question, and that's the question a lot of people have. And that depends on your strategy when you purchase that stock. So one of the things you're going to learn on this upcoming training is, before you ever get into a trade, you should already have your exit plan mapped out. You should already know when you're looking to take profits, right? You got to know that. Just like if you go into a deal with a seller who maybe it's a distressed seller, maybe they're getting divorced, maybe they have a notice of default and the bank's going to take it anyway. When you're making your offer, you're already calculating in mind what you're going to do with that property. Is this going to be something you're going to put in your rental portfolio, or is this something that you're going to flip and have some contractors come in and update and put it on the open market for a profit within 3 months, And
I misspoke on that. I meant I take back my investment. I don't take back my profit. I take back what it cost me.
Yeah. And again, that would be based on your long-term outlook on that particular position, right? So it's the same thing with stocks. Like, I imagine your SpaceX play, you're probably imagining might be a longer term play.
Absolutely.
Yeah. But with these particular types of other trades that we're also talking about, like the ones that I don't really want to say them because they've already made their moves, but with those particular strategies, those are the ones where we want to buy and sell the same day for a profit. And then we're going to compound the growth of our account. At least that's our goal on a daily basis. Mm-hmm. And then there's also a swing trading. So there's really 3 types of strategies I look at when I'm interacting with the stock market. Is this a day trade? Is this something I want to buy and hold for a couple of weeks or a couple of months? Because stocks never move in a straight line. They move in waves. And do I want to just capture that first wave that might only last a couple of weeks? And then there's the stocks where you look to add to your long-term portfolio that you want to have for years to come, right? And that's the way to approach it in my mind.
That's exactly how I set mine up. I've got 2 IRAs. One's an individual, one is a Roth. The Roth I've divided into 3 different pieces. And one of those pieces is stuff I stick in there like SpaceX that I don't want to even touch, no matter what they happen to them today. I don't even want to look at them, okay, because they're long term. The other two, I am doing exactly what you're talking about. I guess I sell them whenever they go up. I sell them, or whenever they go down and never done anything much, I sell them as well. So I'm probably not doing anything right, but I'm learning very, very, very fast.
Well, it sounds like you're doing
I'm glad
something.
you're here. Yeah.
And
Glad you're here. I really am.
And to be honest, I mean, I look at the stock market,
Mhm.
the indexes, the S&P, the NASDAQ. I do look at them similar to real estate in the sense that I think over a long extended period of time, I think the number is going to continue to go up. And I think that happens with hard assets like real estate and blue chip stocks because they keep printing money. And if they keep on printing money, the money becomes less valuable, but the hard assets, they tend to go up. And I know that you've seen that with real estate over the decades. They keep on printing dollars, and they do it in different forms right now. We're going to see what Kevin Warsh says here tomorrow for the FOMC, but there's probably a high probability that they're going to be doing it through the bond markets. And in COVID, they sent everybody checks. They just they just click a button, and all of a sudden there's trillions of more dollars there on the balance sheet. And when we have a larger supply of money overall, and they keep on doing this, the hard assets tend to continue to go up, right? So I think in the long term, it's all about owning assets, real estate, and stocks.
Well, I look at SpaceX like another Google or Amazon or whatever. They're not going anywhere. And if you haven't been reading about SpaceX, you won't really know what I'm talking about. But I also bought 7 or 8 small companies that SpaceX depends on, that they have to have their stuff in order to build what they're building, from advice that I get from newsletters like yours. And we'll see how they work as well. But they tell me they'll go up faster than SpaceX will. We'll find out. You got a system that actually alerts people when it's time to buy and time to sell, don't you?
Yeah. We have an algorithm that's been programmed based off of what Timothy Sykes had discovered. And Timothy Sykes is the gentleman who really founded Stocks to Trade, when he discovered there are a certain number of stocks that have a specific kind of criteria that tend to make fast parabolic moves within very short windows, 24 to 48 hour periods.
Yeah.
And he noticed that pattern happens every single day. There's stocks in the market that will go up double or triple digit percentage gains pretty much every single day. And they have a certain underlying criteria that causes them to do this. I could talk to you about that a little bit, or we can save that for later, like the specifics. But ultimately, this algorithm helps spot them and tells us the best place to buy.
It's all about AI. All right, they're all AI run nowadays. So I don't even care how they got to the conclusion, to be honest with you. I just care that somebody's out there a whole lot smarter than me with tools that I'll never have to be able to recommend these stocks. So I haven't bought a single stock that wasn't recommended by some company like yours. I don't go out there and just hope and pray and buy something because I like it or whatever. And I think that's one of the biggest mistakes people make, isn't it? Fall in love with a stock.
Yeah, you fall in love with the story. You fall in love with the news catalyst. And, these faster moving stocks that we're going to talk about, they have really compelling stories. And because they have, such a limited amount of shares or a low supply of shares, and then all of a sudden there's a high demand or a flood of buyers coming in, that supply and demand dynamic can really cause these stocks to explode in the short term. But these specific opportunities are meant to help us generate daily income. All right. Now, what you're talking about, it sounds like more of a buy and hold strategy, and we love that too. We have different systems for that as well, but they do need to be separated into 2 separate buckets. And with everything that's going on right now in the economy, jobs are being threatened by AI, just like you said. The labor market, and unemployment could be affected massively by artificial intelligence. And we're not just talking blue collar jobs, we're talking white collar jobs, administrative work, legal professions. You know, a lot of those jobs are at risk. And people right now, a lot of Americans, for the most part, are having to get a lot of them second and third jobs, and they're looking for different opportunities because the old ways just aren't working as good as they used to. You used to be able to, get a job with one income, family of four. That one income could support everyone, purchase a house, afford all the bills. And with the rising cost of goods, and this kind of goes back to the fact that they keep on printing money, the cost of goods, everything is going up because of this inflation. Inflation report just came out last week. It went up 0.6% just in 1 month. And that's causing the cost of everything to go up. So I think right now people are looking for other avenues to generate cash flow. And
always. Yeah.
I think what we have here, because it doesn't take staring at a screen 8 hours a day, a lot of the folks in our community, they're getting in and out within 15 to 30 minutes, sometimes an hour. They're done for the day, come back tomorrow for tomorrow's opportunities. And it's allowing them to consistently pull, profits. That doesn't mean they win every day. All right. But we always have those protective stop losses. And we'll get into that in that future session. But I know there's a huge demand and people are hungry to learn more about the financial markets. And with the internet and algorithms and AI, it's given us the ability. On top of that, all of us now have the ability to buy and sell stocks from our phone or computer. Like you can download a Robinhood or Webull or Interactive Brokers or E-Trade app on your phone. And never before have we had this power to be able to make these buying and selling decisions in the stock market on our own. I don't know if, you said you just started investing a year ago, but back in the early 2000s when I started and back in the late 90s, you used to have to call into a broker and you'd pay a commission to buy and you pay a commission to sell. And, the price can move in between that time frame. Now we've got real-time updates on prices within seconds, allowing us to buy and sell real time with the click of our button. And those are amazing abilities for us to have as individuals. But what they don't do is they don't tell you what to buy. They don't tell you when to buy it. They don't tell you when to sell it. And that's what we've done with this algorithm that if anyone is on this call right now and interested in learning exactly how to use, I'm happy to come back and share that information and do a deep dive training on how it all works.
I would like for you to. Absolutely. Again, we got one scheduled July, the 2nd? Yep. By the way, that's noon Eastern Standard Time, ladies and gentlemen. That's noon. So even you Californians, they don't have to get up early. So that's why we scheduled it at noon. In fact, there should be a link down there. You can get on that. Listen, I could question you for hours here. One more thing in my case. I've probably got 40, 50 stocks. I often wonder, shouldn't I narrow that down to maybe 10 or 15 and focus on what I'm doing best, or is it, are okay to have that many stocks? I don't know the best, to be honest. I'm always thinking, well, if I whack one of these things, the next day it's going to go skyrocketing. I'm going to hate myself. So, if I stick with the ones that are doing better, then I can put more money into them. And I just don't know the answer. Do you know what I'm talking about?
I know what you're talking about. And that's the question that a lot of people, they're trying to figure out, how do I optimize my positions?
Right.
And again, I'm not a financial advisor. So of course I'm not going to sit up here and give you financial advice. I just don't have a license for it. If you were asking me how much the value of your home was worth, but you don't need me for that, because I was watching you back before I ever even had my license. I've heard about you. I've seen your books. I've learned a lot from you. Inadvertently, you might not know it. So I appreciate everything you've done to share your wisdom and your knowledge. But I understand your question. And so there's a few ways to approach this. Obviously, you can get with a retirement advisor, and they can, with their license, advise you on that. But then there's a lot of folks who want to learn this for themselves. They want the confidence to be able to figure it out on their own. And what we do is we provide tools to help people make those kinds of decisions. So with the opportunity that we'll talk about, we're going to do the day trading opportunity to the stocks that move quickly. But for your question, that sounds more like a swing trading question, where you might want to rebalance after a month or two if you're up. You might want to take some off. on certain stocks that you have in your holdings that are doing well. And maybe in the event of a pullback, you'd have more capital to be able to add to those positions back, right? Because again, stocks never move straight up. They move in ebbs and flows. So we also have artificial intelligence, swing trading artificial intelligence that is designed specifically for those kinds of questions, like where you could plug in a stock ticker in your portfolio right now, and it will tell you based on a confidence score and about 8 other key criteria and factors, whether or not this might be something you want to trim right now or completely take off the books and, add into your cash position. Because believe it or not, cash is also a position. I don't think, and this is not financial advice, that I ever want to be 100% in anything. I always like to have at least 15% cash on the sidelines.
I get that. I mean, all of them preach never buy more than you can lose. I mean, I get all that. We have the same disclaimers in real estate, but anyway, what I want to talk about some of the mistakes people make buying stocks when they're not working with somebody that knows what they're talking about.
Yeah, a lot of the big mistakes, and there's about 5 or 6 of them that are the most common, but the biggest ones is over position sizing, like going in too big, like betting the farm, right?
Yeah.
Just like you just said, you never want to go all in. You never want to put in more than you're willing to lose. But based on your available capital to trade, and it should never be anything that you're depending on to pay your monthly expenses with, in my opinion. People are going to do whatever they want. Believe it or not, I was born and raised here in Las Vegas. I live in Las Vegas. So I've seen the gambler's mindset, and I know what that entails. And I learned pretty quickly at a young age, stay away from the Strip. There's a reason there's those billion-dollar casinos in the middle of a desert.
Right.
So over position sizing, someone sees something on Twitter or in a Discord server and they get really excited because the story's compelling. They think it's going to go to the moon, and that greed creeps in and they go all in. And they might not realize it, but they could have been in a room where they're going to become the exit liquidity, and it doesn't end well. So proper position sizing is the number one thing to prevent someone who's trading on their own and making their own decisions from being in a detrimental situation when it comes to their account. Okay. Another problem, psychologically, we don't want to ever be wrong, right? If we make a decision to buy a stock, we want to feel like we made the right decision. And if it goes against you, oftentimes people will stay in that position based on hope that it's going to come back. But the fact of the matter is, the stock market is going to do what it does. And if we get into a position and we're wrong, we got to cut losses, and we got to cut losses quickly.
Yeah.
Okay. And that's the reason why we use protective stop losses.
Yeah.
Now, it might hurt your ego a little bit to feel like you're wrong, but after the dust is settled, if that trade doesn't go your way, it's going to hurt a lot less than looking at that P&L and seeing you're down 90% on a trade, right?
We probably ought to tell our listeners what stop losses are. I'm going to do that. You just set the amount that stock can't go below. It automatically sells at the amount if it's headed down below that. And then go ahead.
And then it's all about the entry, right? Oftentimes people will see a fast moving stock or a stock that looks green and it's all like going up. And it's like, well, if it's been going up this much, it's probably going to continue to do the same thing. But by then the move oftentimes has already been made. And at some point, the people who got in early are going to take profits. And if you're the one buying when they're selling, again, that's how you can get yourself in a position where you might become the exit liquidity, which means you're going to be the person that they're selling to. And then that stock could go down, and it could go down quite drastically. So having a proper entry, like the whole goal is to buy low and sell high, right? So if you're evaluating a property and you know that it could sell for $500,000 if it were in tip-top shape, but you're in the living room with the sellers and, the house is 20 years outdated, the plumbing is leaking in the ceiling in one room, there's a certain amount that you can pay for that, right? Just because you got a motivated seller there doesn't mean that you're going to pay top dollar. So a proper entry, just like in real estate, maybe that's 65 cents on the dollar if it were tip-top shape, proper entry in the stock market is just as important. And there's ways to determine that using the proper tools and, modern day technology with institutional grade data. One of the things we do at Stocks to Trade is we invest about $1.5 million a year just to get the real live data feed from the New York Stock Exchange and the NASDAQ. And that's all of the tickers, the updated pricing, everything that you could possibly imagine with that data feed. And then we're able to put it in a combination in such a way where these algorithms and AI can help us determine, based on historical results and historical moves, those proper entries, the highest probability entries. We want to be getting into an opportunity when math is in our favor, just like you want to get into a property when math is in your favor. And there's a very high probability you're going to be able to sell that property for a profit. Same thing with stocks.
Oh, yeah. They're so closely paralleled. I've been, you get a graph every time you punch the ticker, graph comes up, and I've been not buying the ones that looks like they're at the top of that graph. Is that a mistake or not a mistake? Because it looks like they've already gone up. But I always wonder, are they going to go up a lot further?
Well, and you know what? That's one of those things where you might be looking at it and it doesn't look like it's at the bottom, but it can have a lot more room to run. How do you know? How do you know, right? Well,
that's the question.
For instance, if you look at SanDisk, and I don't know if you guys want me to, but I can share my screen right now, or I could just tell you about the chart. But SanDisk, for instance, in fact, I'm going to go ahead and do it if that's okay with you. I'm going to go ahead and share this screen if I can.
Can you do that, John?
Yep, just hit the plus button at the bottom. Yeah, I see. Here we go.
All right. So over here on SanDisk, at the beginning of the year, from what you're describing, you might say, if you were looking at this chart and we don't know what happened past February, you might look at that chart and you might say, maybe you're even looking at it right here. Okay. When it was at about $340 right here, you might be looking at that saying, man, that thing looks like it's at the top right there.
Right.
But one of our tools, one of our artificial intelligences on January 6th told us, no, right here, this is a buy at about $340. It told us that. And it told us because it's looking at the capital inflows. It's looking at the capital rotation. It's looking at the money flows. It's looking at the news. It's looking at the setup. It's looking at the AI infrastructure story. And SanDisk creates memory stocks, and AI requires a bunch of memory. And so this AI told us, it's funny, we were using AI to spot this. It told us to buy this at $340. And this was one of the swing trading programs that we have. And since then, this stock has gone up to $2,167.
Oh my gosh. And what period of time?
Since January 3rd. So in about 6.5 months.
This year?
This stock, look at that. It's moving right now. It's at $2,000, and we were alerted to get into it at about $340.
Yeah.
So if you do the math on that, it's gone up over 6 times. 600% gain. That's enough to turn $1,000 into 7,000. It's enough to turn 10,000 into 70,000. It's enough to turn 100,000 into $700,000. And it kept on alerting us on the way up, which is another indicator to stay into it. But that's just like one example. So sometimes I understand what you're saying. It might look like it's at the top, but again, when you have the right tool, it could give you the confidence to enter and maybe hold. And I just took that off. So there we go. But I hope that answered your question a little bit, because the answer really is it depends. And when you have the right data and information, it can help give you the confidence to make the right decisions on whether it's a continuation move or it's a dip that you want to do a dip buy. And you don't always want to buy all dip buys either, because those can just continue to dip if they don't have the fundamentals behind the trade setup. So the answer is kind of like
me that you're going to alert me ahead of time when you see those kind of stocks, right?
Well, what we like to do, I think it's more empowering. I think it gives folks even more confidence to be able to figure this out on their own. And we have the training, we have the tools, right? We have the data, we've built everything, but like our mission at Stocks to Trade is create, independent traders that can learn the skill. Because I believe once you have this skill, nobody can ever take it away from you. Once you have this skill, you're going to have a lifelong skill, just like anything else. Like you want to become a carpenter, you need the right tools to build, but you also need the right skill and craftsmanship to make it, high quality craftsmanship. Well, just like in trading, it's a skill that can be learned, but you also want to have the right tools to support you on those endeavors. And it's similar in real estate as well. I know data is really important in the real estate industry, like having that motivated sellers list and putting together those campaigns and having the skills to be able to negotiate and doing price anchoring and, having different creative finance options depending on the situation. That's a skill that can be learned. And
that's
it's
my
similar.
specialty.
Yep.
Yeah. Okay.
I know it is. I know I've learned a lot from you around.
You guys handle options too, right?
We do.
Yeah.
Now that's a leveraged position. Okay.
Yeah.
And that can take a 5% move in a stock and turn it into a 200% move in the same time frame. But it is also a leveraged position. So at the same time,
explain to people what that means, how do options work?
In a nutshell, without having people's eyes glaze over, when you buy one share of a stock, right? If that price goes up or goes down, you're going to own that share no matter what, right? You can sell it, you can buy it, depending on where the price goes up and down, and there's no expiration on that. You can hold it for 10 years, you can hold it for 20 years.
Yeah.
When you're buying an option, you're buying a contract. You're buying a contract that gives you the right to buy or sell that stock.
Like a wholesale house deal.
At a certain price by a certain time. Correctly. Yeah. You're buying a contract.
Yeah.
Now, if that stock doesn't go to that certain price by that date, when you buy that contract, what you're buying is a premium. And that premium will fluctuate up and down based on three forces. It'll move up and down based on the price of the stock going up or down. The value of that option contract will go up or down based on the volatility in the market. And then the third factor is it'll move up and down based on how much time is left in that contract. And so, if I buy one contract, the reason why it's so attractive and it's become one of the most popular way to interact with the markets for folks, if I buy one contract, it represents 100 shares. Okay. So if I were to buy 100 shares of SpaceX right now, we just took a look at it. It's at $200. Now it's at $200. I would have to pay, if I wanted to buy 100 shares of SpaceX right now, I would have to pay $20,000. Okay. Now, if I wanted to buy an options contract, which they're not available yet after a company IPOs, it'll be available on the 19th for the options. But let's say they were trading options. If I wanted to buy an option contract that I believe it'll be above $210 by next month, it's at $200 now, I could, and it would allow me to control 100 shares at a time.
Yeah.
But I would be able to do that for a fraction of what it takes to buy 100 shares. It might only cost me $400 or $500. Okay. But if that stock goes above $210, instead of getting a 5% gain, I might get a 200% gain on that options contract. The value of that contract could go up from $500 to $1,500. However,
so in other words, if the stock goes up $20, that's 100 times 100. So that's 20 times 100 your gain.
Yeah. I mean, the most basic way of looking at it. Yeah. But those other two factors, like how much time is left in the contract and the volatility, will also have an effect on that premium price. But to try to understand it simply, yes, it's a leverage position and it feels like you have 100 shares, but you're only paying a fraction of the cost. Now, the downside is if it doesn't go towards that price, within that period of time, you could lose that premium. If it goes to that date and it's not above that price, that contract can expire worthless. So that's the trade-off. In options, you can make much bigger percentage gains, but after that time expires, if it's not at that price, you could lose the value of that premium. And we do have courses and trainings to teach folks how to do that as well.
Yeah. Well,
I started off just buying.
Making a lot of money at that. Yeah.
Yeah, you can. You definitely can. But you need the right education and coaching to make sure you know what you're doing. And the other thing is you could always practice paper trading. You could always practice with fake money, learning how to get in and out of positions until you're ready to put real money on the line. And I always say, no matter how much money you have, you could have $1 million or more liquid. Start small. Start with a few $100, a few $1,000. You don't need to go big in the beginning until you really understand what you're doing. And then once you have the skill and the confidence, then you could lever up if you want to.
I got 2 options expiring this month on the 18th. I'm going to lose both of them based on what they're worth now and the short time between now and then. Then I got 2 options that expire on the same, and I'm going to win on both of those. So I hope it'll all at least even out. I hate it when I wake up and all I see is red. I want to wake up and look at green. That means everything's went up. And we've had some of those days in the last few days, haven't we?
Oh yeah, we had a nice pump off of this piece deal that hopefully gets signed on Friday, and hopefully we get back to normal. But that news that came out on Sunday, it really helped the market pump up. We've got another catalyst coming up tomorrow. Kevin Warsh is our new Fed chair, and he's speaking. That's going to have an effect on the market as well. It always does, because he's the one that's going to tell us whether or not they're going to cut interest rates or raise interest rates or keep them the same. But more importantly, the thing to look out for is what he says on his forward guidance. What are they going to plan on doing? What are they likely going to do with the rates heading into the end of the year? And that line of words that he says, whatever combination he says those words in, is definitely going to have an effect on the market tomorrow. But again, whether the market goes up or goes down, there are ways to capitalize and position yourself on the movement of that money. And this is another part of that skill that I think anybody can learn if they have the desire. And this is something that's fun. There's something new every day. I get excited to wake up on Mondays. Most people go to work and they dread Mondays. We get upset on Fridays because the market's closed and now it's the weekend. And, we got to wait till Monday again for even more opportunities. But it's a really fun skill to learn. I'll just put it like that.
I see some stocks moving over the weekend when the market's closed. How does that happen?
So, they are changing rules right now. There is what's called overnight trading, and then there's futures markets that can affect the prices. And so institutions and big banks, they can buy and sell over the weekend.
Really?
There are futures contracts now that can allow people to interact with the market over the weekend. And they're changing rules to where eventually, and I think this could happen in the next year or two, just like the crypto markets that trade 24/7, I think eventually they're going to be tokenizing all of the stocks in the market. That's if you ever read the Clarity Act, which they're pushing through right now. The entire stock market is going to be tokenized, and it will allow 24/7 trading eventually. But right now, it's mainly the big players that are buying and selling over the weekend and overnight and in the pre-market.
Yeah, okay. I get it now. I get it. Hey, I hate to tell you this, but we're already 15 minutes past our due date. So can you briefly tell us what we're going to learn? And by the way, we're looking at maybe a 90-minute training on July the 2nd. And I got a feeling we're going to be scheduling another one after that one, because there's no way you can get in everything that we want to get in an hour and a half. We're going to have Q&A after it. It's going to be live, guys. It's going to be live. It's at noon live Eastern Standard Time, July 2nd. So mark that on your book. If you got something there that's conflicting with it, move it. Move it. This could be the most important 90 minutes you ever spent. All right. So you want to quickly go over what we're going to do there, or is there too much to try to do that?
No, I'll just give you the elevator. I think based on this conversation, there's probably we could do 2 different sessions. But on the first one, what I find most people are interested in the most popular way to approach interacting with the markets is through the day trading strategies, where we're putting ourselves in a position to approach the markets to earn daily income, put ourselves in a position to go after daily income. We get in, we get out, we get paid. What kind of opportunities are those? How do we find them? How do we know the best place to buy them? How do we know where to sell them? And it's our algorithm called Oracle that allows us to do that, because it's been designed and programmed and it's coded to find these opportunities. It has come out of beta testing about 3.5 years ago, never missed a day. Every day it's provided a handful of stocks that have hit our entry prices and gone up either double or triple digit percentages. And when it hits that signal entry price, through a third party verified analysis company, they took all the historical results of Oracle, and through thousands of trades, they found once it hits that entry price, it has a 79.6% probability of exploding up in price. And then it tells us key levels to sell. So I think for the first session, for those that are interested in that, I'm going to teach on that for about an hour, maybe an hour and 15 minutes. And then after that, if anyone's interested in maybe a different swing trading strategy, it sounds like you've been asking a lot of questions about that. We can maybe set something up for later in July or August, and I can come back and talk about the artificial intelligence that we use for that. And both of them are amazing tools. They kind of complement each other.
Yeah.
And but that first one, we're going to be talking about what's called the daily income trader system, powered by Oracle, the algorithm, finding these fast moving stocks every day.
I can tell you right now, Danny, we're going to need a whole one just on options.
Oh, well,
a whole session.
If you want one of those, that might. Okay.
So you guys, you get registered for this thing right now, and you will certainly be notified when we're going to do the one after July 2nd. Look, it's free, for crying out loud.
Yeah.
Free. Register for it. And here's the big thing. Show up. Don't just register for it. Mark it out. I'm going to send you, we'll send you reminders, but so many people don't show up after they register. What's that going to get you? If you're not going to show up, don't even register. Now, here's another thing I'd suggest for you. Between now and July 2nd, if you do not have an account that you want to trade stocks in, get one set up before that, because I promise you're going to want to go buy some stocks. Now, look, I don't make any money here out of this period. Danny don't make any money when you buy stocks, but you're going to make money if you buy the right stocks. But if you have an IRA, then you need to move some of that money in your IRA to a company that will buy stocks for you. I use Fidelity. I had to move some of my money from my IRA to Fidelity and open another account, because they wouldn't allow me to buy stocks unless they had my IRA account. I don't care who you use. It doesn't make a bit of difference to me. In fact, Danny, do you have any suggestions on that?
Well, we work with, I don't know if you've ever heard of Prime Corporate Services, but they're really good at optimizing that and helping people out and figuring out that component of it. Me personally, so there's certain ones that you can use for long-term investing in your IRA, and there's certain ones that I think are better for short-term trading in your IRA. I like Charles Schwab. I like E-Trades for the shorter term prospects.
Yep.
E-Trades is one of those ones that I think you could set up an IRA in, and you can still do the shorter term and the midterm and the long term. So I mean, I would have to say E-Trade.
I have a Charles Schwab account as well. I like it. Easy to work with. These things are easy to work with. So again, make sure that wherever you move it, that it's self-directed. Okay, you're in total control. Get it ready to go, and then you'll be one step ahead. Because sometimes you better move quick on these stocks, because sometimes they move quick. You never know what's going to happen even between now and July the 2nd. By the way, you say SpaceX is 220 right now, right?
It went up to 225
already. Oh my God! We've been talking
225 this morning, but it is now back down to 195 right now.
Gee whiz! It went up and down that fast, huh?
It's very, very volatile. Now, there's something going on with SpaceX. They put out, so again, they have a float, right? They have a float of 13 billion shares, but there's only a small amount of those shares available to trade right now. So the price it's pretty volatile right now. It's kind of acting like one of these smaller stocks right now because I think about 90% of their entire stock is locked up. The early investors that bought in during the early rounds before the IPO, they have a certain amount of time where they can't sell them, right? They're not going to unlock until July, right? So because there's a small amount of shares available to trade right now, and now retail traders are trading, it's causing this stock to make some pretty wild swings. So, I don't know where it'll end up, but I know that there's going to be an unlock period soon.
My point was this simple. You guys write down $195. I'll give you the low one here today. And let's see what happens to it on July 2nd. So make note. I'm going to make a note myself. And it's just fun to play with this stuff, especially when you can't lose because you don't have anything invested in it. But it's even more fun when you do have money invested in it on the good days. All right. The bad days, you just say that sucks. I'm going to go find something else to do right now. Anyway, man, I can sit here and talk to you all day, but our 30-minute podcast is already last 50 minutes. So we better get out of here. Again, guys, there's a link below, and it's ronlegrand.com/stocks. Oh, it's in front of you. All right. Right in front of you. So write it down right now. Make sure you show up. We'll remind you in a quiet place, no disturbances, and get ready to do something with stocks. And even if you don't have an IRA, I suggest you get one set up. I use directed IRA, directedira.com, and they've done a good job for me. And by the way, that Prime services you were talking about, we got a webinar coming up with them very shortly. So.
Oh yeah, they're awesome. I've used them for both real estate and in the stock market too. They're really good with that stuff. So yeah, we could talk for hours about this, but that's all we have today. They're gonna have to click that link or go to ronlegrand.com/stocks, sign up, and I'll be back on July 2nd.
See you then, sir. Thank you.
All right. Thanks. Have a good day.
You too.
That's all for this edition of the Mentor Podcast. To connect with Ron and learn how you can attain financial freedom, as well as up-to-date strategies to grow and protect your wealth based on today's discussion, go to www.connectwiththementor.com.